Hello, everyone. Chris Ruhm with the Ruhm-Insurance Agency, licensed independent insurance agent located in Cincinnati, Ohio. Currently hold a license in 20 states. Today, I'm going to go over the health insurance products I offer and why I send a form out. I think when you get this form and you see the form and then you see the different offerings, it'll make sense why I need information on these forms. Okay, so I'm going to go to my health page here. Health insurance. We have the marketplace, which is Obamacare, the Affordable Care Act, whatever you want to call it these days. This is the safest place, okay? And the reason I say that, they allow for pre-existing conditions. My other two options, you have to be healthy, okay? There is no other way around it. They have health underwriting, and if you can't answer no to all the health questions, then this is not an ideal plan. And you have to be very truthful on these applications because they can cancel your policy for any reason if they find out that your no answers were actually a yes. So this is really a reason for anybody to get health insurance. You might have missed the Affordable Care Act. That would be one of these two plans. You're becoming self-employed and you're losing group health coverage, or you're planning on retiring and you need a policy. So depending on how you fill out the form, I can kind of navigate these three options. Okay, so we have the marketplace, short-term health insurance. Currently, you can get a plan from 1 month up to 3 years. The 3 years depends on what state you are in. Like Ohio, it's only 2. So just depending on what state you are determines the type of policy. Okay, marketplace covers all preventative. Short-term will allow you to go get preventative benefits, but you're not going to get them at zero cost like you can with the marketplace. And then this private PPO offering is the third option. This is a unique new offering. It's actually a large group health benefit plan. And the company offering it is called LifeX Research Corporation. And they only research healthy people. So they have a health risk assessment. It's a questionnaire right here. And if you can answer all those questions no, then you're eligible to become a part-time employee, less than 2 hours a year of work. You have to answer a few health risk assessments. They usually take about 10 minutes. It's probably less than an hour a year of work. They actually pay you to do these health risk assessments, and then they give you access to their large group health benefit plan like any other large group health insurance plan could. Okay, so it's an ERISA self-funded large group health benefit plan. A company that you've all heard of that offers a health benefit plan to their part-time employees is Starbucks. They have an ERISA-based large group health plan. Okay, so let me show you why the form's important now. Okay, here is a 62-year-old in Cincinnati, Ohio, male, making $60,000 a year. Okay, this is a marketplace plan. They're eligible for a $588 a month subsidy. Okay. So what that means is the least expensive plan without a subsidy is $799.96. With a subsidy, it's $211. Okay, so they're getting a large break. But again, this is why the form's so important. I could quote 20 different 62-year-olds and come up with different rates just based off of a different income. All right, so we'll go to $50,000. Now it's a $671 a month subsidy. I'm going to go back to 60,000. It's 588 again. Now I'm going to change the zip code. 45245. Now we're exact same area, Cincinnati still, Claremont County versus Hamilton County. The subsidy went up. They get a $618 a month subsidy. The plan was $821. The plan pricing is changed literally by county. So that's why it's important that I get accurate information. And then when it comes to household income, well, if you're not accurate, and let's say you say 60,000 and you come in at 50,000, that's going to work out in your favor. You'll get a credit on your tax return. Let's say you told me 60,000 and you end up making 85,000. You're going to owe a lot of money back because you no longer qualified for a subsidy. So the plan is $821 a month. Okay, so that's how the marketplace plans work. In Ohio and most states, all of them are HMOs. All of them have metal levels. Bronze is the least expensive with the highest max out of pockets. Gold is going to be the most expensive, and they still have pretty high max out of pockets, but their deductibles are typically lower, and their copays and their co-insurance, which we'll get into further if we go this route. Again, all HMOs. Here is a short-term health plan. I've already put in a 62-year-old just for comparison purposes. I'm going to mix that up. We'll do 5, 10. Not 100. We'll do 185 pounds. So here are the things that go into rating on a short-term. Do you smoke? Have you had medical insurance at least 9 of the past 12 months? What's your height and weight? If your weight is too much, you could be declined. Are you rewriting an existing Allstate policy? Probably not. But if you've already had this plan for 2 years, you can get it again for another 2 years if you're in Ohio. Or if you're in a state that allows it for 3, you can re-up. But they're going to ask all the health questions again. So that's why it's asking that. And then what I'm going to show you is standard rates. But if we answer these preferred, this makes a difference. Do you ride a motorcycle? How many speeding tickets you have? Do you have high blood pressure, cholesterol, or anxiety or depression? Any yes answer to this, you're not going to get the standard rate. So we're just going to view standard rates. And now I can select a term length. So if you're 64 and a half and you're retiring and you only need a policy for 6 months, you're going to get a better rate than somebody that needs it for 2 years because there's less risk for the insurance company. So we're going to do, since this person's 63 years old, we're going to do 2 12-month renewals so they can keep this policy until they get to age 65 for Medicare. It's also important with this plan, since it's not ACA compliant, Affordable Care Act compliant, that you choose an ending period that's going to end around the open enrollment window. Because if something serious happens in that window, you could be denied coverage. And if it happens in July, and you've now been diagnosed with a serious condition, we're going to have no options because this isn't considered credible to give you a special election period to move. Okay, so it's very important on the timing. Here you'll see the premiums. I was showing you a plan for if you were subsidized on the marketplace, way less than this. So this would not make sense. I'd do a marketplace plan. There's no reason to have a $5,000 deductible for $891 a month if you can get that plan that I was showing you that was basically $200 a month if you were at $60,000. Now, at a premium or at an income where you're not getting a subsidy, this is more attractive now because it's only $5,000. Those were like $10,000 deductible or max out of pocket. So again, that form helps paint a picture of where you might fit. Okay. Now, looking at these rates, I would take it one step further. If you're healthy enough and you can answer all the health questions no, and you're willing to do the part-time research work for LifeX, again, probably less than 2 hours a year, maybe even less than an hour a year, and you want access to these group benefits, let me show you the most popular plan people are getting right now. This is the copay plan, and it is a PPO network. I'll click on info. We'll click on the brochure, and you can see down here a 63-year-old male employee can get this plan for $509. So they have a really nice PPO plan. They can keep it for the next 2 years until they age into Medicare, and they're good to go. Okay. Now, again, all these plans are a little bit different. I'm going to go back to all the plans. So let me just go back one more. Looking at these plans, major medical, that means they're traditional PPO plans with copays, max out of pockets after the deductible, and they cover generic and brand name drugs. Now, if you're on a brand name drug, you're probably not going to qualify for one of these plans because of the health questions. But if you are prescribed one down the road, you don't have to worry about it. Okay. HSA, we have 3 different options. These are my favorite plans. No matter what stage of life you're in, I find these to be the best value. This is very affordable too. Again, this is major medical as well. So you've got your generic and your brand name if you are prescribed one down the road. These are called visit limit plans. These are the budget plans, very budget plans. They are limited. We would go over that. These are going to be the most cost effective, all right? But they're also limited to the amount of coverage you can get, and it could leave you grossly uninsured, or underinsured, I should say, okay? The limits are great. It's the best of any limit plan out there. I see a lot of advertising on social media, etc., and they push these big time because of the commissions, okay? And it's pretty ridiculous, some of the plans out there. And these have limits, and within the limits, they're pretty defined. So I'm somewhat comfortable with these. I'm not comfortable with the ones I see on online that are being pushed heavily. We would go over them thoroughly and make sure you understand the risk, all right? And then these copay plans, going back to the VL, these products are all generic drugs only. So if you're prescribed a brand name drug down the road, you will have to figure out a way to get that more affordable. They do have a patient assistance program, but I would never guarantee that patient assistance program is going to get you a good cost. But I would help you try and figure out that, but that is another risk, all right? And then these are the copay plans. These are also generic only, okay? So anybody who gets one of these plans from the get-go is likely on generics only or no medications. If you're on any brand name drugs, again, it's very unlikely that you're going to qualify for one of these plans, okay? So with that said, the copay plan, this one here and this 1500 are probably the most purchased of all the plans out there. But even these are really affordable if you want a lower deductible, okay? So again, lots of different options to choose from. And this is kind of the path I go from by using the form. So if you see here is, where did I have the form here? Let me go to my get a quote page. And then here you have quote forms. All you have to do is click on 2A and it takes you to this form here. You fill out your name underneath everything. And when everything's filled out, you just click submit and I get an email. So hopefully that's helpful. These are the products I recommend to my clients. If this isn't for you, great. Just at least you have some little more education on what the options are out there. Thanks for watching and have a great day.